Oil Daily Forecast, December 26, FXEmpire.com. The light sweet crude daily chart in front of you rose slightly on Friday as traders continue to buy up the market in response to the bombings in Iraq, the tensions with Iran, and the uncertainty in North Korea. The market is currently attempting to break back above the $100 level again, and it is forming what looks like it could be one of two different patterns. It could either be a downtrend channel, and we're simply at the top of it, which would be a sell signal. However, further complicating things is the fact that it could also be a bullish flag. If we get above the 103 level, it would be considered a break of this flag, and this measures to roughly about $130 to $132, depending on where you take it from. With that in mind, that would be very bearish for a lot of other markets once we get towards the top, but would be extremely bullish for oil in the short term. The more likely scenario, though, is that this was a bounce and we will see continued pressure as we drift slightly lower. The Brent markets aren't quite as cut and dry. The 105 to 110 level has basically been the range that the market seems to want to be in most of the year. We have bounced back up into this area, and it does look like it's running into a little bit of resistance, but the market has proved more than once that it's very comfortable in this area. The 95 level below is absolute support, and the 112.50 level seems to be pretty serious resistance. As such, we look at this pair as perhaps grinding sideways with a downward bias, as the Europeans tend to use Brent more than the Americans, and with Europe going into recession, it does beg to follow that Brent will be used a little bit less. With this in mind, we think that the spread, crack spread, is something we don't speak of very often here at FX Empire, but we think that the spread between the cost of light sweet crude and Brent may actually narrow a bit to more acceptable historical levels, which is about $5 as opposed to the 20 that we've seen most of 2011. With this in mind, we are willing to sell weakness, but we understand that this market may kind of float around in this general area, so we're not looking for massive moves quite yet.